Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of previous monthly resistance, which is now turned support. Now, as the market is testing this previous resistance turn support, we could expect a rejection to the upside, which is exactly what the market did. And from here, we could expect more potential bullish continuation for the creation of a new monthly higher high. So here in the monthly, everything is very bullish. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we can see this area even more precisely. This zone was previous resistance, again resistance here, which the market broke to the upside with this impulse. And at that point, all that previous resistance became support here. The market has in fact already tested its zone, started rejecting it to the upside, and from here we could expect more bullish continuation away from this area. Going down on the daily time frame, what do we see? Now, from a daily perspective, first of all, I did speak about USDJPY just a few days ago when the market was here. I explained all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. However, what we must notice at the moment is that in creating this move to the upside, the market has also created new structure. In fact, what we can notice is that we did have the creation of this W formation, meaning that essentially we had a double bottom at its zone and we had resistance here, which has now been broken to the upside, meaning that the market has shifted from a bearish market creating a new lower low and a lower high to now creating a higher high, so essentially a break above this previous high. So at this point, we could expect a higher low and seeing more bullish continuation after that. We can also notice that since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that and take our Fibonacci from this low to this high, we can see how essentially we have the 0.3 to 50% and 0.618 Fibonacci retracements, all lining up exactly at this zone, which we could in fact expect this market to potentially test and then to reject to the upside. We can also notice that if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the JPY, we can notice that even though with the last three reports, we have seen some decrease of the net positioning, this is so essentially an increase of the net positioning becoming less negative. We don't see any kind of longs going into the JPY from an institutional perspective. In fact, in the long run, it is very clear how institutions have been positioning themselves to the bearish side of the JPY, meaning to the bullish side of USDJPY, going from minus 20k net positions all the way down to minus 117k net positions. So essentially more than 5 times more bearish on the JPY. This has made USDJPY very strong because clearly if institutions start adding a lot of shorts on the JPY, this makes USDJPY stronger because the JPY is getting weak. And clearly the market has been pushing to the upside. Now, with the last few reports, we have seen a decrease of the net positions, but we are still sitting at minus 90k net positions, meaning that overall there are still way more shorts than longs on the JPY from an institutional perspective, going from 120k and when it comes to the shorts, to 29K when it comes to the longs. Now, what this means is that essentially we're still very bearish on the JPY. So USDJPY still has the possibility of getting another rejection to the upside, fueled by this weakness of the JPY, which comes from institutions being positioned in a very bearish way on the JPY. If the market will go and test this confluence of support, there's a good probability that inside of this area, institutions once again will be adding shorts on the JPY, pushing USDJPY higher. So if the market will go and retest this area, how we could be approaching a potential reversal higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll over, you will see that there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.